Hello viewers, we'll be going over natural gas. In this video, we'll be going over my trade idea of the week and the day-by-day probability model. So let's start off with the technical analysis for natural gas. We're currently down 1.6%. However, the US market is closed due to Labor Day. As for the 1-hour chart, we are starting to approach to negative MACD. We see slight signs of converging, and we still remain below the 200 moving average, this green line, which act as our temporary resistance at around a price of $2.56. As for the 4-hour chart, what we have here, we are testing right along the 100 moving average, this orange line, which is acting as our decent support as indicated back in September 2nd as well as September 4th. So that will remain as our immediate support, and at the moment we have now reached closely to positive MACD. As for the daily chart, what we have here is we continue to make higher lows as indicated here. So let's draw that trend line up from the lows of all the way to August 12th, same as all the way to current lows that date back to September 2nd as well as September 4th. So we do make higher lows. So if we do manage to, say, reverse and head down lower, the next possible resistance will be around where we encounter resistance that dated back to August 17th, and since we're above resistance, that acts as our support for the meantime, and that is around the price of $2.36. On the other hand, if we do manage to continue to move up higher, the next resistance will be around $2.71, where we encounter resistance back in August 27th. So if we do manage to head up higher, that price movement to the upside is roughly around 6.7%. On the other hand, to the downside, that price movement to hit support is roughly around 7.5%. As for the daily MACD, we saw divergence back in September 1st, and for the RSI, we're not near overbought RSI yet. So for the trade idea of the week, I'll be trading UNG. So what we have here is, for my trade idea, my long position will be less than 1% of my portfolio, and my entry on my long will be at $13.04, fairly close to where we encountered previous resistance that dated back to August 5th right here. And my sell target will be $13.96, and my stop loss will be $12.96. On the other hand, if I were to open a short position, my entry will be $14.72, above where we encounter the 200-day moving average, and that also coincides with previous resistance level that dated back all the way to, say, if I mark it right there, all the way to May 5th. So that coincides with that resistance over there. And my sell target for my short will be $13.12, and my stop loss will be $15.53. So how did I develop these trade ideas? It all comes from the day-by-day probability model, which is available in the link below, so do check it out. As we progress to the 5th day or a week of trading, we have a 10% chance for natural gas to climb higher between 0 to 6%. On the other hand, we have a 60% chance for it to fall between 0 to negative 6%. And a further extreme case, to the downside, a 30% chance for it to fall between negative 6% to negative 12%. So if you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.